Now, moving on to macros, the Federal Reserve held interest rates steady on Wednesday with a 12-0 vote, as broadly expected. But the real story wasn't the decision. It was the man delivering it. And the era he just declared over. Kevin Walsh shared his first ever Fed meeting. His opening message to markets and the world was blunt. The Fed will no longer telegraph its next move. From here on, there will be no forward guidance or no soft landing reassurances. That alone rattled a market that had grown addicted to policy predictability under Jerome Powell and prior Fed chiefs. The sell-off resulted in a $1.5 trillion wipe cut out across the stocks, metals and crypto in just about 10 minutes. That's not a correction, but a repricing of uncertainty from the Fed on its policy path.
You might have already noticed something, a difference in today's policy statement. It's a bit shorter, a bit simpler, and it dispenses with some older language. That statement just gives you the facts as best we can judge it. Absent also is so-called forward guidance, which we agreed was not well suited to the current policy conjuncture.
The dot plot told its own story. The easing bias that markets were banking on is gone. 9 officials now project a rate hike this year, with several of them more than one. 8 see no change, only 1 sees a cut. And Walsh didn't even submit his projections for the dot plot. That last detail is a signal in itself. Dissent by abstention.
I reviewed the dot plots, and when I saw the submissions, I noted that all the submissions were coming in with pencils, those kind with the big erasers.
The median inflation forecast was revised higher. The inflation has remained well above the 2% target for 64 months now. Walsh said that the Fed will fix 5 years of misses. That is a direct indictment of the Powell era's failure to meet the inflation target. Walsh also said that Fed will no longer pre-signal rate moves.
That's what we're prepared to say about inflation, but the commitment to deliver is strong, unanimous, and unambiguous. And that's, I think, an important message. We've missed for 5 years, and we're going to fix that.
Under Walsh, the Fed is cancelling the expectation management model itself. The new Fed boss said that markets should not look at the central bank for cues, but must read data and react. Walsh wants the market to reflect a feedback loop to the Fed and not the other way around. For markets that have spent years front-running Fed signaling, this is a structural shift. The volatility after Wednesday's meeting is not a one-day event. And it's the market learning to price in silence. The Fed didn't move rates, but Walsh moved the goalposts. A press conference built on strategic ambiguity, and the resultant $1.5 trillion sell-off wasn't panic. It was the market finally getting the message.